Taiwanese index, however, is seeing some cuts. That one is down 0.4%.
Net interest margin is at 26 quarter high at about 3.96%.
Importantly, the cigarette business was the one that was the one which led the performance.
Here's the first take on the index. You have the Nifty that's up about 50 odd points, up 0.2%.
India will do broadly much better than anyone would have expected.
The recovery from the pandemic is likely better than had been feared.
We're up close to about 0.4%.
I think we saw very strong inflationary trends in Q1, up to almost about 6% inflation in terms of the overall material prices.
Delivery is down, 18% in today's trading session. And why just today? In fact, yesterday as well was down. In the last two trading sessions, it's seen some of the biggest intraday declines since listing earlier this year.
Expected to be a weak showing from Reliance in the quarter gone by. In fact, it's reflected in the stock as well.
The market is holding up with a 75-point gain, so looking quite good over there.
Well, you're with us here on a new edition of Closing Bell. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. You know, before I do anything else and begin to start talking about markets, etc., a little birdie from the production control room while I was outside told me that, you know, you guys are the pits. In the morning, when we were kind of the entire newsroom came together to say Happy Diwali, wish Happy Diwali. And those of you who saw the program in the morning would have seen that. You know, I was told by this person that the only cohort which was missing were the people in the production control room. Yeah. So here is wishing all of you a very happy Diwali from the people you cannot see, because they are basically the people who are behind the cameras, rolling, telling us what to do. And I mean, you know, everything that you see on air is thanks to them. So it's a happy Diwali to all of you in the production control room and on your behalf to everyone outside as well. I think I get some brownie points for that.
But actually, there's so many teams, right, behind what they see, what people see on TV. Not just the production control room. You've got the assignment desk. You've got the makeup people. There's just so many of us, you know, putting together this show that everyone's watching today.
Yeah, no, absolutely. And I think you're absolutely right, Reema. Well, so let's just take a quick look at what the market is doing to kind of kick this off. It's a rapid sell-off. From the day's high, the market's come off very, very sharply. And we're down 26 points on the day. 17,538 is where we find ourselves at, which is not a really good outcome. The market, by the way, is below that 17,581 level for the, fourth day now? That is the 61.8% retracement of the September fall, which we've highlighted non-stop. Market breadth has fallen off a cliff. Declines now outnumber advances. Banks, though, continue to be the strongest part of the market. The bank Nifty, the last I checked, was up 1.5%. But the problem is, it is the only sector which is actually even in the green. All other sectors are in the red. You look at real estate, you look at FMCG, metals, I mean, one after the other. Within banks, the private banks are doing a lot better. Axis, ICICI and Kotak are really the strongest of the lot out there, which is leading to this move that we have in our hands right now. So you'll see, it's not a bad outcome. I mean, given the kind of change we've had in global markets and the relative outperformance once again this week. But the 70, 80 points, at least for the bulk of the day, look nice, and that is not there. Maybe it'll come back. Who knows? Full 60 minutes to go to market close. Reema, hi. Nigel, hi.
Or maybe it'll come back on Muhurat Day, right? That's usually a lucky charm for our markets. But let's quickly take stock of the week. The Nifty is up close to about 2%. The mid-caps are higher by 0.5%. And as Prashant pointed out, it's the banks which have taken charge today. So the Nifty Bank is higher by close to about 3.5%. Top honors go to Axis Bank this week, fueled by the 6% gain today. So Axis Bank is up 10% this week, while State Bank of India on the PSU side has gained about 6.5%. But the stock, Nigel, which is, you know, it just astonished me on the way down, has been delivery. Another 20% gone today. This week it's down 32%. The stock is now below that 400 mark. Its issue price was 487. 3 months back in July, the stock was at 700 rupees. You know, everyone's shopping on e-commerce as well, right? So where is this slowdown coming from? The moderation that the company is talking about in the next couple of quarters is just surprising. And the fall as well has been astonishing.
Well, that's right, Reema. You know, they gave that warning out that things could be slowing down. I think that's clearly spooked the street, you know, because on ground we believe that things are different. But that alert that they put out, that spooked the street. And the stock is getting an absolute hammering. Earlier, there was some kind of bottom fishing that people were attempting, but now, in fact, it's locked at lowers again. There are pending sell orders as well, so just keep an eye out on that one. A quick point on the index from the highs of today, that was at around 17,670. We have seen some selling. Just pull up the 17,600 call. That's the most active strike today. There's a huge amount of open interest out there, and the premium on that particular one is close to around 80 rupees. At the start of today, it was close to around 110 rupees odd. So the writers on this strike, they are counting on the 17,700, 17,680 to around 17,710 holding out. And that's precisely from where we did a bit of a U-turn. So massive open interest built up. Keep an eye out on that strike. That's giving you a sense that these bears, they believe that now we're at the upper end of the band and they want to come in there and protect that. So interesting final 60 minutes coming up. But for the time being, let's run you through what we have lined up on the show for you. What lies ahead for market in Sambat 2079? We'll be joined by market veteran Shankar Sharma. He'll be joining in to discuss stocks and the markets in just a bit. And it was the second quarter for Axis Bank with the net interest margin as well as net interest income coming in at 26 quarter highs. A complete fine print on that one. Emphasis is also reacting to its quarterly numbers. Earlier today, we had the management saying the pricing environment is currently stable. Key excerpts from the chart that we had with management lined up in just a bit. And UPL will be on our radar as the company realigns its existing business. We'll run you through the valuations and what it means for the company. In key earnings to track, a lot of big names. Kotak Mahindra Bank will be one of them that we'll be telling you what to expect.
All right, how should you position yourself in this last hour of trade? Mitesh Thakkar is with us to tell us that. Mitesh, hi. Good to have you back on the program. Should you buy this dip or just wait and watch for a bit longer?
Prashant, not buying this. Actually, this dip has, good afternoon. This dip has actually, taken out a stop loss, the revised stop loss, which was at about levels of 17,585. So I think just waiting it out, maybe you will get a slightly deeper cut over here, and maybe you will see test of around 17,475, 450 zones. That could be a buying point, entry point. So you might be about 70, 80 points away from there. But trading stock specific biases for now, and the calls that I have right now, I have a buy on Ultratech Cement. I think that's the stock, which is breaking out nicely. So that's a buy. Keep a stop at about levels of 63.40 here, 63.37 to be precise, and look for targets of around 6,500 in the short term. Crompton is something which is broken down, so that's a sell call. Keep a stop just above levels of 378.5 and look for targets of roughly around 360 on the downside.
Okay, those were a few trading ideas. Nigel, Ambuja as well came out with numbers, right?
Yeah.
Like ACC, a big miss on margins?
Well, that's right, Rima. But I think after ACC, when they delivered 0.5% margin, I think the street was factoring in that these numbers are going to be rather weak. But the stock is not cracking. A couple of reasons out there because it's corrected close to around 15% from the recent peak. The other factor in there is now the street is building in that there's going to be cost-saving measures. Remember, from the coming quarter itself, the EBITDA per ton will go up by 55 to around 60 rupees because that royalty of 1% will go out of the way. Besides that, for the group itself, there'll be a recovery. So for the industry, there'll be a cost saving. But for Ambuja Cements as well as ACC Cements, the street believes that there'll be a higher amount of saving because now volumes will pick up. Now you have a new promoter come in there. There'll be some synergy benefits as well. So that's why the stock is more or less flattish. But otherwise, the numbers are weak. On the top line, it was a little bit better because realizations are likely to be a little better. Volumes bang in line. EBITDA was 130 crore miss. But margins came in at around 8.5%. Remember, for ACC, they just managed to deliver an operating profit. So these numbers were a miss, but the street is clearly looking ahead, and that's why the stock is down only around 1%. Prakash, wanted your quick comment on the cement space. Are you still going with the old darling, that's Dalmia, that you normally are very fond of, or have you changed your loyalty? Is the big boy Ultratech Cement saying, everyone's disappointing, I'm giving inline set of numbers, and I'm the big daddy?
Good afternoon, Nigel. So, I think Dalmia continues to still offer a lot of salience given its geographical spread and the efficiencies that it comes along with. So I don't see any reason why you need to kind of, start getting away from it. But on the other hand, what's interesting is now that, once the numbers are out, and especially the larger ones, the bigger players have told you that very clearly their numbers tell you that there is pressure on margins for sure. Even when there has been revenue growth, product mixes like Sri. In the case of Ultratech, it was probably a little bit of expansion that they have been more focused on rather than working on efficiencies in the existing units. All of that has started playing out. So interestingly, when this whole operational consolidation gets done with, which is probably another 2 quarters, and they'll get busy as we get into December and Jan, then you will probably see the emergence of very clear value in within the M&A angle, which people have kind of now stopped talking about after things have settled on Ambuja and ACC. But my sense is Nuvoco is one particular name that you could look at. It gives you great geography. The efficiencies are decent enough. EBITDA is also kind of not so expensive, and the whole idea of buying into a unit for anybody who acquires is that it adds much more value than just pure capacity, and that's one unit that does. So I would be happy if those numbers don't disappoint. It'll probably give you an entry into a new name of sorts. But Ultratech and all, of course, continue to be the backbone of the portfolio for most players who don't want to most investors who don't want to bet on marginally smaller players. But I would definitely stick my neck out with something like Nuvoco at some point in time now.
Okay, Nuvoco and Dalmia Bharat, these would be your picks in the cement pack. But let's talk about Axis Bank. It was a very strong showing from Axis Bank. The net interest margins coming in at a 26-quarter high, and now it's very close to ICICI Bank. So it's closed the gap with ICICI Bank on all the margin as well as the return ratio parameters. Abhishek is here with the fine print and what brokerages have made of it. Abhishek.
Well, for Axis Bank, it's fired on all cylinders or across metrics if you take a look. So net interest margin is at 26-quarter high of about 3.96%. The NII growth on a sequential basis came in at close to 10.5%, which is the best in 26 quarters, and around 31.1% on a YY basis, which is the best in last 25 quarters. This has helped the return ratios with ROA of 1.8% and ROE of 18.5%, both being one of the best in last 7 years. So asset quality has been pretty good. The gross NPA ratio has declined to 2.5%. So X of Q2 FY21, which was the RBI dispensation quarter, this looks like one of the best in last 25 quarters. And net NPA ratio is at just 0.51%, which is the best in last 28 quarters. So CASA ratio, or the low-cost deposit ratio, has now crossed the 46% level, which is one of the best that you are seeing in last 16 quarters of 4 years. So cost to income ratio or operating efficiency, that's also one of the best in last 5 quarters. Annualized slippage ratio of just 1.83% is perhaps the lowest that you are seeing in last 8 quarters. Restructured book has also declined. Watch list has also reduced, which means that the stress in the balance sheet is actually reducing. The only flip side in the result was the deposit growth, which was around 10.1% YOY, one of the lowest deposit growth that you are seeing in last 6 quarters. So PNL, they have beaten our poll both in terms of NII and PAT. Brokerages remain bullish on the stock. They say that this is a time when the valuations are on the lower side and the fundamentals now augur for a re-rating of the bank going ahead. They have raised estimates for FY23 anywhere between 8% to 14%, and for FY24 and 25 anywhere between 1% to 11%. So across brokerages, the new target price range is around 990 rupees on the low side and as high as 1,150 per share. Back to you.
Abhishek, thank you very much for that. Prakash, investors will now be spoiled for choice in the private sector financials. ICICI Bank has had a very strong track record of reporting good numbers over the last many quarters. For Axis Bank, in a way, this has been a turnaround quarter. HDFC Bank's numbers were also steady, and then that's been such a long-term wealth creator. It's got a little bit of an underperformance on its side as well. Which one should investors look at, or should you just tank up on all three and reduce your exposure to some other sectors?
So, yeah, I do echo that sentiment of having been spoiled for choice as investors. But what's essentially important is that depending on your time horizon, you'll probably be able to create that kind of a alpha from some of the names which suit you more. For instance, if you are willing to look at least a 2 to 3 year horizon to evaluate how your returns fare. Then probably HDFC Bank will come back once the merger is behind us, and then you'll probably see a lot of synergies which will start kicking in. But if you're looking at something in the short term, Axis still has a lot of legs. This rally which we have seen is more like a comeback of sorts or a catch up of sorts, and it could probably give you some more gains if you're looking at more from a short tactical term. But Rima, the whole idea is that you need to have exposure to these giant businesses which are going to benefit much more disproportionately than some of the other sectors. So I don't think you need to look at, pairing exposure within the private sector banks particularly. The only public sector bank that comes to mind is, of course, SBI, if you were to add that. But between ICICI, Axis, and then sometime soon, once the results are out, probably Kotak will also start smartening up. So you'll definitely have more choice. But I would stick to HDFC in the long term and Axis in the short term.
Okay, all right. So HDFC in the long and Axis in the short term from Prakash. UPL is the other one which is losing in trade on the back of fresh news flow on a strategic corporate realignment. Sonal is here with more details in this one. Sonal.
Thanks a lot for that. Well, the stock has come in for some profit booking. Remember, the stock was up 5% yesterday. The company has announced a strategic corporate realignment. They're creating pure play growth platforms, and in some of these platforms, Abu Dhabi Investment Authority, KKR and TPG will be investing. So they have bifurcated it into 4 platforms. The first one is India Agtech, which is a digital platform, which is also called UPL SaaS. There is Global Seeds business, which is called Advanta. The manufacturing and specialty chemical business, which is the core business, UPL Limited. The fourth one is a part of UPL Corp, which is a subsidiary of UPL Limited, which is the global crop protection business, ex of India, which is called UPL Cayman. Now, Adia, Brookfield and TPG will invest 1,580 crore rupees in UPL SaaS, which is the digital business, and the equity valuation that would make is 17,380 crore rupees for the digital platform that they have created. KKR will invest 2,460 crore rupees for 13.3% stake in the Advanta business, which is the seeds business, which makes the equity valuation of this business around 18,450 crore rupees. And as was stated earlier, Adia and TPG will continue to hold 22.2% stake in UPL Cayman, which is one of their global production business as well. Now, prior to realignment, if we look at the financials for UPL Limited, they did revenues of 46,240 crore rupees with an EBITDA of 10,165 crore rupees, and the equity value as of yesterday's closing price was 50,800 crore rupees. Now, post the realignment, if we look at the different verticals, UPL Limited, that is the agrochemicals business, has revenues of 14,574 crore rupees with EBITDA of 1,310. UPL SaaS, that is the digital business, has revenues of around 4,000 crore rupees and an equity valuation of 17,380 crore rupees. Advanta has revenues of 2,800 crore rupees, which is basically their seeds business, with equity valuation of 18,450 crore rupees. So if we look at the pre and post numbers, it looks like the agrochemicals business is up for a re-rating according to the structure that the company has made. Just looking at UPL Limited Cayman, revenue at 38,000 crore rupees, EBITDA at 7,500 crore rupees, so that's the bigger business. But this alignment or this restructuring has been done in order to ensure that the core business is re-rated from here on, and they've set the basis as far as the other 2 verticals are concerned. So that is the update as far as UPL is concerned.
All right, Sonal, thanks very much for that. Prakash, I don't know if you have any views on UPL. If you do, please weigh in. Also, briefly, even if you can weigh in on delivery. Is this kind of a cut in 2 days on the back of a tepid business update? I mean, that seems a bit excessive. The other thing, of course, with these names is that the lock-in for pre-IPO investors, I think that comes up due on the 10th of November, between the 10th and 20th. But that is, usually these index inclusions or exclusions, you see a little bit of market participants here trying to front-run that. But this is, I don't know if that kind of thing is even possible here. And by the way, the lock-in is existing investors. The quantum for which the lock-in will expire is some 39% of the equity. So that's a pretty large. One doesn't know if everybody will exercise and sell, but the share is cracking now. Any thoughts there?
So, I think this is very clearly the current trend in e-commerce traffic or workload factors. It is very clearly giving you a signal that it's not going to be great times, particularly which, in a festive season, which was supposedly one of the best, right? So that's something which is worrisome for people who hold this and who are expecting some sort of a recovery. The other thing is, if that 39% comes up in terms of potentially it is kind of vulnerable enough to be sold, then what could happen. So instead of waiting for that, a lot of people probably wanted to preempt it. But there's no particular reason why it would happen in these 2 days. I'm sure there's much more than what meets the eye in that sense. But my sense is that people have got tired of waiting for a revival in terms of the business, and then nothing much has happened. And in fact, it's actually gone down. So, I mean, it's slowed down. But it's a great business. To replicate that with the kind of efficiencies that they have built in, I think, Prashant, that itself is remarkable. If you see their internals in terms of what they've done, they've taken a long time to establish themselves in that space. So I don't see any reason why it would be a washout fundamentally, unless there's something else that's kind of one-off, but it's hitting the P&L in a big way or something. But otherwise, it's a good business that you should keep on your radar and evaluate. And there would be at some time bottoming out, which is worthwhile to relook at it from a medium to long-term perspective.
I guess all consumer shopping has just moved to going in person to the stores, to eating out rather than just doing delivery, because sales are happening. But delivery, unfortunately, has not been a big beneficiary of the festive bonanza. Prakash, thank you very much for that. We need to slip into a very short break. On the other side, we'll invite market veteran Shankar Sharma to discuss what lies ahead for the markets in Samvat 2079.
Happy Diwali to CNBC-TV18 and all your viewers. You have a healthy, prosperous and fulfilling year ahead.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
IXIGO. दादा IXIGO नहीं IXIGO. IXIGO नहीं IXIGO. नाम में क्या लगा है बिड़ू? सीधा बोल देने का. IXIGO ट्रैवल ऐप डाउनलोड करो, बिंदास टिकट बुक करो और निकल लो.
This festival, bring in Nissan Magnite. Big on dreams. Bold in passion. Beautiful in every drive. Rush to the nearest Nissan dealership now.
Give me red! मिहिर और मीना की शादी होती है. मिहिर के बच्चों के बच्चे होते हैं.
बात अगर लंबे चलने की हो तो सिर्फ न्यू एवर रेडी अल्टिमा. Alkaline batteries that last up to 400% longer. New ever ready Ultima.
Celebrating the efforts of pioneering compliance professionals across industries and upholding the ethos of ethical behavior in the corporate world. Catch all the highlights. Compliance 1010. Compliance by choice. Hosted by Legacies Beyond the Horizon on 23rd October at 4 p.m. on CNBC-TV18.
OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस.
सुनीता, सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज देता है आपकी कार का बेस्ट प्राइस. ये प्राइस ही नहीं, सरप्राइज है. विजिट olxautos.in.
कोल्ड कॉफी होती है.
बेबी, कोल्ड कॉफी.
50 सालों से आपके लिए कुछ नया सोचते आ रहे हैं. मिल्टन.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं. अब
फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम, आग से बचाए।
बैंक से बोल रहे हैं, ऐप डाउनलोड करने के लिंक भेजा है।
हेलो अंकल, फेक लिंक भी भेजा और भेजा फेक QR कोड, और हर बच्चे को पता है दैट यू आर इन फ्रॉड मोड।
साइबर फ्रॉड रिपोर्ट करने के लिए नेशनल साइबर क्राइम रिपोर्टिंग हेल्पलाइन नंबर या cybercrime.gov.in पर अपनी शिकायत दर्ज कराएं। साथ ही साथ बैंक के टोल फ्री नंबर पर भी शिकायत दर्ज करें।
Okay, the market's down 30, and it's been that way from for the last almost an hour now, and not picking up or anything. 17,531 is where we're at. Market veteran Shankar Sharma is now joining us to run us through, his thoughts on the markets and what he's making of things. Shankar, great to have you back on the show. Thanks very much. First up, it's the most auspicious time of the year with Diwali upon us. So let me wish you and your family, your team, a very happy Diwali from all of us here. And thanks again for being here. How are you feeling about the market, Shankar? Very bullish, mildly bullish, or just bullish?
Thanks, Prashant. And I heartily reciprocate the Diwali wishes to you, your family, to, I think, Nigel. I'm sure he's there somewhere.
Yeah, absolutely, Shankar.
Okay, I can't see you yet, but I'm sure we'll get to you very soon. Hey. Right. So very, very happy Diwali to all of you guys. And by the way, I take very strong exception to being called market veteran because, that makes me feel very old. Everybody who meets me tells me that I look very young, particularly now.
Who have you met recently, Shankar? Who did you meet recently?
Please do change that, moniker that you're using for me, from market veteran to a market teenager or something like that. Maybe not a teenager,
Gen Z.
20 something, Gen Z, yeah, something like that, whatever the hell it is, okay? Right. So you gave me three choices, right? All of them are in the deep green zone, and I think that's a decent place to be in terms of the range of choices. I've been very, very bullish from, I think, the last, I would think March or so. I was very negative back in October, November. If you recall, in fact, I'd been negative from pretty much middle of last year. If you recall, Prashant, I think back in April or May, we'd had a fairly decent conversation around, sort of the global macro factors shaping up. And the analogy I had used was that really markets were skating on thin ice. And, you can keep skating, but you don't know when the thing is going to break. And it broke from November. So, what it was fairly clear that something would give and something did give. And, in India also, obviously, because it's not going to stand out a move of that kind, it did fall a bit, but, it didn't fall a lot. And that's the interesting thing here that, frankly, I don't recall too many instances in the last 20, 25 years in which India has stood out a fairly decent downward move in the markets. And that is very telling. It's like a first. Hopefully it's not the last. But it's a first when India has stood out a very large global correction, a very large problematic global macro situation. And that, to my mind, is like a canary in a coal mine, in a good way, that it is telling us that India is going to stand out and a little away from, from these problems that we are seeing in the rest of the world, including our colonial masters, who are going from bad to worse and to further worse. So I think this is a genuine decoupling. I hate to use this word because it was badly misused, 12, 13 years back in the 2008-9 crisis. But I think this time it is for real. I think the decoupling of India versus the rest of the world is genuine. Therefore, the short answer to your question is that I remain extremely optimistic on India, and I remain very, very optimistic within India on the smaller cap end of the market. And interestingly, Diwali, small caps have beaten, large caps by a fair distance, if I'm not mistaken. So yeah, so even the tape is telling you exactly that.
Okay, there is a bit of a disturbance. Shankar, can you catch that?
There was a call coming. Sorry, my apologies.
All right. Hi, there's Rima here as well, in the studio, and we would love to have you in person so we can see this teenage market, not a veteran. So next time, do make your way to the CNBC TV18 studio. Don't be holed up in Dubai over there, Shankar. But I just want to throw this, another possibility, right? That at some point of time, maybe next year, the Fed will stop tightening. And once that albatross is off its neck, do you think the other emerging markets, which up until now have underperformed India, will actually start outperforming India? Do you think the tide can reverse once the negativity in the global market starts ebbing?
I think that's a bridge too far right now to start visualizing what the Fed is going to do, 8 months or 9 months or 10 months from now. Again, Prashant, if you recall a few conversations back when you'd asked me what you think the Fed is going to be doing, and I had said that because they made one mistake before being, too late to the tightening, into the tightening cycle, they reacted too late. They are going to overcompensate. Whether we agree or disagree, or whether it is merited or not merited, is a different discussion. But they will overcompensate. And that's exactly what you've seen, that they have really been overcompensating for their, let's say, laxity in the preceding years. And that, as far as I can see, is not something that will just be easily reversed or easily moved away from. It's a major stance shift after 10 years of expansionary policies. It's a major stance shift. And I do not think they can just swerve or make a U-turn or at least a right turn and say, okay, we've done enough and let's just back off a bit. I do believe that they will overcompensate even now, which is therefore to say that to look a year out or 9 months out, I think is right now extremely, extremely dangerous. Let's just stay with where we are, what is known, but there could be a lot of unknowns out there, including a nuclear war.
All right. Hi, Shankar. Good afternoon. Thanks so much for joining in. I'm not going to debate about the veteran and the youngster out there, but you're looking pretty fit going by the workout regime. So that's pretty good news. But, let's focus on market and the themes as well. Now, people were looking to play this unlock theme via various ways. And you said if you don't have a visa, then you can't play it, because I'm just looking at a recent investment, BLS International. This theme still looks good because some of these stocks have seen a big run if you're looking at the hotel space or you're looking at a couple of other unlock themes. But tell us more about this recent investment.
Yeah, so I just made an investment, I think, last week.
Yes.
And it's not an unlocking theme trade, to be absolutely clear. It is something which is a very unique business. In the list of businesses you evaluate, there are very few businesses you come across in which an Indian company in a global business is number 2. And after VFS, which is a very well known in the visa issuance, visa processing business, the number 2 company in the world is BLS, and then there is a third company which is in Europe. It's a very, very unique position for an Indian company to occupy on a global platform, on a global basis, for governments to trust their most sensitive document, which is a passport, to an Indian company. Is something very, very creditable. I don't know of too many companies in India which can lay claim to anything even close to this. So it's like a fairly tightly controlled business. 3 players account for 70-75% of the overall business worldwide. BLS is number 2. Hopefully they'll win some new contracts which are coming up for renewal, which can completely change the profit trajectory. Of course, till you win it, you don't know. But if they were to win the UK contract, or contract in Italy or in Australia, or even parts of the US visa program, the numbers could be substantially higher than what the market is modeling for. So, and on the other hand, there's no debt. It's a cash-rich company. By the way, even in COVID, they made a profit, which is saying something. Where your business depends on COVID, on visas getting issued, they still turned in a 50 crore profit even in the 2 bad years of COVID. So that again shows you resilience. So it's not cheap. But, great companies or good stocks, I don't think in India will ever be trading at 5 or 8 multiples. So it's expensive if you look at today's visible earnings, but a couple of contracts can change the numbers dramatically. So, that's the play here. Cash-rich company, unique space, decent moat in the business. I, again, don't like the word a lot, but and good ROEs, good cash flows, dividend paying. I think it takes the boxes as of right now.
Okay, Shankar, we have a request coming in from the entire CNBC-TV18 team from the newsroom. They all want to hear you sing a song which perhaps encapsulates your feelings for the market, how you feel right now about the markets and this Diwali.
My goodness. I mean, you have to start paying me now.
Festive season, Shankar, don't disappoint us.
Okay. I'll sing a little song again. I usually sing roughly, so I will stay with my comfort zone. So, again, this is a song of love, and we are all in love with our little small cap bull market at least, and the song that is appropriate to my mind, because this is a surprise. Okay, you never prepared me for this, by the way. Okay. ए फूलों की रानी बहारों की मल्लिका तेरा मुस्कुराना गजब हो गया ए फूलों की रानी बहारों की मल्लिका तेरा मुस्कुराना गजब हो गया न दिल होश में है न हम होश में है नजर का मिलाना गजब हो गया ए फूलों की रानी बहारों की मल्लिका तेरा मुस्कुराना गजब हो गया. That's 5 rupees, guys.
Thank you so much, Shankar.
Thanks, Shankar. That's, by the way,
this is a song of love. I mean, we are all, like I said, in love with the Indian bull market, and each time it goes up, it smiles at us, and it's a gazab for our hearts.
And gazab ka singing, gazab ki sing.
Don't go there.
But absolutely fantastic. This is a pleasure to listen to.
I think next time we have you on, you said you objected to saying, don't call me veteran market investor. Maybe a singer moniker will be the better appropriate way to introduce Shankar. Absolutely fantastic.
Anything is better than being called a veteran.
A veteran.
Okay? Seriously.
All right, Shankar. Thank you very much. And once again, happy Diwali to all of you. Appreciate it.
Have a great Diwali. Bye.
All right. That's Shankar Sharma, not veteran. And outlining his market views, remains very, very positive on the market, very bullish on the market from here. Small caps, of course, his chosen area, and I think as he outlined, BLS is the last investment that he's made just recently. It's done well. I mean, it's up about 16% or so this month. We'll take a very quick break here. We'll come back, and as always, we'll get you a quick check on what's happening in dealing rooms. Our colleague Nimish, of course, picks up all the buzz on D-Street chatter. We'll also get you the buy today, sell tomorrow calls with a technical expert. Stay with us.
ये लो अब खाओ कद्दू इसके चक्कर में 2000 का चालान लग गया.
बाइक इंश्योरेंस रिन्यू करते तो नहीं लगता ना पापा.
इंश्योरेंस कितनी महंगी है पता है. मैं यहाँ पैसे बचाऊं सस्ते कद्दू के चक्कर में 15 किलोमीटर दूर जाऊं.
2000 रुपए का सस्ता कद्दू.
बाइक इंश्योरेंस महंगी पड़ रही है. प्रीमियम स्टार्टिंग एट जस्ट ₹1.5 per day on phone pay. Tension free insurance.
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
There's more of us in the squad today. There's a young one in the crew. There's a big boy in the gang. There's more color in the tribe. More styles in the wardrobe. We may look mean, but we're still the safest guys to be with. There's more punch, more legacy, more wow in us today. The original rock stars are rock stars still. But there's one thing we will be today and every day. New, now and forever. Tata Motors, new forever.
मैं चाय नहीं पीता। हे एक मिनट। भुजिया के बिना चाय नहीं पीता। पिकाजी है ना? हाँ।
I'm a G, loves Pikachi, loves Pikachi.
Celebrating the efforts of pioneering compliance professionals across industries and upholding the ethos of ethical behavior in the corporate world. Catch all the highlights. Compliance 1010. Compliance by choice. Hosted by Legacies Beyond the Horizon on 23rd October at 4 p.m. on CNBC-TV18.
To be or not to be? Cut. To be. Cut. To be. Cut. क्या हो रहा है यार ये? एक्टर से कट पुतला बना दिया है। अबे कट करना ही है तो अपनी लाइफ से ये पुरानी लाइट्स कट करो। मतलब जिसका एलईडी लगाइए और अपने पावर बिल्स को और एनवायरमेंटल डैमेज को भी कहिए कट। दैट इज द क्वेश्चन। कट। जिसका एलईडी लाइट ईयर्स अहेड।
जिंदगी को दें रफ्तार, शुरू करें इसी त्योहार, खुशियों का सफर बिताएं साथ मिलकर। त्योहार तभी हो जब अपने साथ हो। SBI के संग इस त्योहार छोटी किश्त से बड़ी खुशियां ले आए। SBI, the banker to every Indian.
Welcome back. Flattish trading session. We've recovered though from the low point of the day. Well, plenty happening actually. So let's hop across to Nimesh, who's going to tell us whether or not there is much action in the dealing rooms in D-Street Chatter. Nimesh, everyone's on leave or you're still picking up?
Hi Nigel, so no, there is presence clearly and there is volumes as well in today's trade is the feedback. But again, market is just in a consolidation range. Again, around 17,600, you see the bit of resistance and a bit of profit booking as well. What is leading today is the financials, and that's where largely on back of strong earnings as well as the fact that there is FII buying as well in most of the financial stocks today. The bigger worry is the broader markets. That's where some bit of profit booking is sipped in, and you're seeing a lot of stocks down 3-4% from the highs. Even after strong numbers, you're seeing some bit of profit booking in some of those recently announced results as well. So that's where there is a bit of pain now in the broader markets. The Nifty mid-cap index itself is down 0.5% in today's trade. I guess from a Q point of view, of course, technically 17,600 is a level to watch. But I guess Monday will be an important day because we have Reliance reporting numbers today evening, so it will react on Monday. And there are a couple of big bank numbers which will report over the weekend. So that's going to set the tone for the Indian markets on Monday. But as today's things are concerned, there is buying largely in the financials. But I guess there is equally profit booking as well in the broader markets today.
Nimesh, I have to say your strike rate is getting better and better. I'll come to the new stocks today, but we just outlined UPL. Then of course there was that you gave a hint about PNB housing, and it's both have been bang on. So what do you have today, Nimesh?
Hi Prashant. So in today's list, the first stock is Metropolises. That stock is buzzing in trade and largely on back of some bit of buying back. And I understand one of the leading AIF has been active buyer in Metropolises in the last few days. So that's the reason why a bit of outperformance of late in Metropolises. So that's the first one. The second stock is Best Agro Life. We got the management few weeks back and they sounded quite confident about the quarter two numbers as well. Today there was multiple block deals. Almost 10 lakh shares have changed hands, and the feedback is one of the leading US-based fund was a buyer in today's block. So the disclosures will be quite important as far as Best Agro is concerned. The third stock is Delivery. For second day running, that stock is massively under pressure. Even in today's trade, the stock is down 17-18%, the last one I checked, and there were multiple blocks as well. So the feedback is maybe some of the domestic institutions have sold in today's block. But again, Q2 came as a big negative surprise in terms of update, and that's why you're seeing selling pressure. Remember, the IPO lock-in is still not open, so there is going to be further sell-off in November when the IPO opens up, IPO lock-in opens up, and private equity investors sell. So that's the reason why there is a bit of concern in Delivery. And the last stock is Finolex Cables. Again, when the broader markets are under pressure today, that stock stands out in terms of big gainer, up 7-8% in today's trade. In Finolex Cables, the feedback is that there's going to be a family settlement within the promoters very soon, and hence a big up move in that stock in today's trade.
Hey, all right. Thanks a lot for that. Nimesh, clearly street sensing something on Finolex Cables as well. Nimesh has put down those 4 stocks you should keep on your radar. By the way, Laurus Laboratories, that's the stock that's getting a hard knock as we speak. They've cut their guidance. Earlier, they were guiding for close to around $1 billion in terms of revenues. Now they are saying that they'll achieve close to around 90% of that. And that's the reason now the stock is down close to around 7.5%. So as the news hit the exchanges, we did see a bit of a downtick on the numbers, and post that number on the guidance, well, the stock has got absolutely clobbered, down close to around 7.5% as we speak. Maybe we'll try to get an Ekta to get in further insights, but for the time being, missing guidance, street doesn't like it at all. Getting back to markets then, Mitesh Thakkar is back with us. Mitesh, we have been in this range. We went to around 17,670. We corrected 140 points in the top. Now we're holding closer to around the 17,600 mark. What's your take? Which way do we swing from here, and what are the levels you're looking at?
I think, while the overall trend is positive, I think this last leg of up move started from 16,950 thereabouts on the 13th of October. And since then, we've covered about 750 points. So maybe, there's that on the hourly chart, there's some mild sign of weakness, which means that there could be consolidation happening. We've actually got triggered out on the trading stop loss basis. So I think around 17,450, 470 is always my buying area if it comes to that in a day or two. And then we'll take it from there. On the stock side, though, I think Gujarat Gas is something, which is breaking out very nicely. So that's BTST. Here I would suggest, sorry, excuse me. Here I would suggest stop at about levels of 494 and a target of around 512, 513 to begin with, and maybe even higher. And the other one which I like is ICICI Bank. ICICI Bank is a BTST with a stop at 900 for targets of 918.
Mitesh, on the Nifty, you'd wait for the index to retake 17,580 or so before doing anything?
No, I think, I would want it to come down, Prashant. The idea is that the trading stop has got hit, and now I think either the Nifty starts getting past 17,700 or it comes down to 17,470, 450 for me to buy.
All right. Okay. So either way, a little higher strongly or maybe a little lower, which then gives the opportunity. Mitesh, thanks very much for that. Emphasis is down sharply. It's down 5% or so. This is on the back of earnings. Nitin Rakesh is CEO of Emphasis, and we spoke with him. Listen in to him explaining what happened in the quarter.
At this point, the pricing environment is, I would say, stable to still tailwinded for the right type of skills and the right type of services. So I think there has definitely been, a realization at the client level that we are in an inflationary environment. They're seeing it in their business. They're seeing it in their employee pools. They're seeing it in their attrition levels. I think as we head into 2023, if the uncertainty gets worse or the macro gets worse, then I think we'll start, using the playbook of, vendor consolidation, driven wallet share gains. And at that point, I think there may be a little bit more competitive intensity on pricing. But at this point, so far, YTD current quarter pricing environment is fairly stable, and in fact has actually been helpful in mitigating some of the headwinds from wage inflation.
Of Emphasis, we'd spoken to them earlier today. By the way, if you could just pull up a comparative, of the growth, what Emphasis did in comparison to the other tech companies, you'll see that they were lagging. Some of those tech companies, the stock price reaction didn't really come in line, but some of them surprised on the positive side. I think we could get a table up for you. Emphasis lagging its peers, and that's why, in fact, the stock is getting a harder knock. Well, Dipan Mehta is with us. Hi, Dipan. Thanks so much for joining in. Good afternoon, and wishing you, your family, a very, very happy Diwali. Let's focus on mid-cap IT, Dipan. Emphasis is a stock. The management joined us earlier today. They were sounding optimistic, but clearly the numbers are not reflecting that, and they're not able to go ahead and revise their margin guidance upwards as well. What's your take on mid-cap IT and this stock in particular?
Good afternoon. Thanks for having me on your show, and happy Diwali to you, entire staff of CNBC, and all the viewers. It's going to be a great year. I can just feel it in my bones. But I think mid-cap IT is the way to play the software investment theme. And large-cap IT, I think, will struggle to kind of maintain single double-digit type of growth rates. But especially mid-cap IT, which is focused on specific verticals, niche offerings, IP-related, platform-related businesses, should do pretty well. And even Emphasis BFL, they're generally quite positive on. It may be having certain issues with clients, some delays here or there. But by and large, I think it's been a solid performer. And as I've always said, I think the best way to play would be through niche offerings, which companies are providing, likes of, say, Tata Elxsi or KPIT Cummins, or persistent systems. I think all of these three companies came with a very good set of numbers, maybe mildly disappointed to the analysts, but on a year-on-year, quarter-on-quarter basis, they delivered phenomenal numbers.
Deepan, hi, good afternoon. Any thoughts on IndusInd, which was one of those re-rating kind of candidates, right? The worst was behind and all of that. It's not been discussed too much, but I think what is perhaps worrying some is that on the liability side, looks like some deposits, maybe accounts were closed or whatever, but basically the savings account part was down about 6% on a quarter-on-quarter basis. Liabilities for IndusInd has been a problem a couple of years back as well when, we had all those issues. No one is saying it's that bad, but what would you do with it if you have it?
Yeah, Prashant, good afternoon. We own IndusInd shares as a matter of disclosure and for many years as well, and a big disappointment post-ILFS crisis when a lot of value was destroyed. Then we have change of management, and thereafter I think certainly the performance of the company and the stock price returns have certainly improved. And basically there are certain chinks in the armor as far as IndusInd Bank is concerned. On the liability side, on the asset side as well, its focus is on microfinance and vehicle finance, which intrinsically is cyclical and not as risk-free as some of the other segments. But I'm not too perturbed on the liability side. I think the kind of environment which we are in and the kind of network which IndusInd Bank has got, I think that shouldn't be much of a problem. And what we noticed in September quarter could be a mere aberration. But IndusInd Bank is also all about re-rating of the price to earnings multiple. Historically, during the good old times, it was trading at a premium to HDFC Bank and ICICI Bank, and now it's trading at a discount. So there is some catch-up that can be expected over there. And by and large, I think the balance sheet is now pretty much clean, and they are poised for growth on the asset side, liability side. And I think it is perhaps entering a new growth phase. So I would remain invested in IndusInd Bank. But as I said, the top preference has to be for the likes of ICICI, Kotak, HDFC. I think from a risk-return profile, those are far better.
Okay, all right. Deepan, stay with us for the time being. Let's hop across to my colleague Vahistha. She's joining in to analyze ABB. They reported their numbers. Vahistha?
Hi Nigel. ABB Group had reported their
Yes.
September ended quarter numbers yesterday, but the highlight out here is that ABB India business order inflows are up 44% on a year-on-year basis, which implies an order inflow of to the tune of 2,500 to 2,700 crores in Q2 of FY23. Now let's look at ABB Group's Q3 ongoing calendar year's results. The revenue growth has come in at 18% on a year-on-year basis, which comes to approximately $7,400 million US, which is driven by pricing and cost control measures. The company has also clocked the highest ever EBITDA margin of 16.6% in this quarter. And with this, ABB Group is likely to achieve their 2023 margin target 1 year in advance. So some positive news. Also, the ease of in component constraints will shorten the delivery lead times and shall trigger a normalizing of the order pattern for the company. The order backlog is also at a record high of $19.4 billion US at present. The order intake for the September ended quarter was at 8,000 approx million US. And within the past 20 days, ABB had won $170 million US of order to enhance the Europe's railway network. America and Europe business has already improved by more than 20% in this quarter, and Germany has witnessed a normalization of their inventory levels. However, China is witnessing some kind of slowdown and declined by about 2%. But the decline was much lesser than the company had expected. The company has also given some outlook for Q4. They expect lower double-digit margins, which is and on the revenue growth. And for the ongoing calendar year, there is a likelihood to achieve the 2023 target of an operational EBITDA of 15%.
Vaishya, thank you very much for that. We'll take a very quick break, by the way, here. The market has swung back into the green, up 21 points, 17,585. More on markets when we return. There is just 8 minutes to go for market closing as well. Stay with us.
हेलो
हेलो सर, मैं संकल्प कॉलिंग फॉर कार इंश्योरेंस।
अरे यार सुन अभी नहीं, मैं पार्टी में जा रहा हूँ यार।
अच्छा पार्टी,
सर वैसे पार्टी से याद आया, अगर आपको थर्ड पार्टी इंश्योरेंस चाहिए ना तो हेलो
मोटर इंश्योरेंस चाहिए बिना कॉल्स के झंझट के? नो अनवांटेड कॉल्स ऑन फोन पे। टेंशन फ्री इंश्योरेंस।
बेटा तुम करते क्या हो?
ये कबाड़े वाले या रत्ती वाले।
अब जब बाजार के ऊपर मकान होगा तो परिचय भी कुछ ऐसा ही होगा। सिग्नेचर ग्लोबल सिटी। एक दुनिया वो थी और एक दुनिया ये, गली मोहल्ले की चिक चिक से दूर, दिल के पास। बालकनी खोलो तो आवाजें यहां भी आती हैं, चिड़ियां यहां थोड़ा जल्दी उड़ जाती हैं। इसीलिए इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू। सिग्नेचर ग्लोबल सिटी।
India Bulls Housing Finance Limited announces a public issue of secure redeemable NCDs, offering coupon rate of up to 9.55% per annum and additional incentive of 0.25% per annum. Tranche 3 issue closes on Friday, 28th October. To subscribe, log on to indiabullshomeloans.com. For risk factors and more details, refer to the Tranche 3 prospectus available on the websites of SEBI, Stock Exchange, Company and the lead managers.
Thank you, Amit ji.
जुग जुग जियो, जुग जुग जियो, खुश रहो, खुश रहो।
Thank you so much.
ओके ओके ओके। शादी भले ही वर्चुअल हो, थैंक गॉड मिठाई रियल है। बीका जी रसगुल्ला, अब बजेगा ढोल।
अमित जी,
हाँ जी,
पी।
शनाई, बीका जी गुलाब जामुन।
पर आपने तो मिठाई खाना छोड़ दिया ना?
हाँ यार, पर ये तो बीका जी है ना।
Amit ji loves Pikachu, loves Pikachu.
Hurry, hurry.
Will snow days be a thing of the past? Or are we smarter than that?
राहुल, अब तुम बाप बनने वाले, हाँ? तुम्हें एक अपना घर अब ले लेना चाहिए।
अब पापा देखिए, आप लोग को छोड़ के मैं कहीं नहीं जाने वाला।
छोड़ने की बात कौन कर रहा है? हाँ? अरे यहीं पास में कोई एक घर देख लो। वैसे भी हम कब तक तुम्हें झेलते रहेंगे?
सच्चा दोस्त वही जो आपके बारे में सोचे। होम लोन्स फ्रॉम IDBI बैंक। बैंक ऐसा, दोस्त जैसा।
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
Welcome back. There's 5 minutes to go for close, but it's important to highlight that Kotak will be reporting its second quarter numbers tomorrow, and it's important we present a quick preview. Abhishek is here to do that. Abhishek, take it away.
For Kotak Mahindra Bank, the preview suggests that the NII growth may be at a 12-quarter high, leading to 7 to 8-year high in terms of net interest margin. So loan growth is pegged at 24% YOY and about 4% sequentially by CLSA. Low-cost deposit traction will continue to remain strong. A net interest margin could be at a 7-year high, given the fact that CLSA is pegging the net interest margin to be at around 4.97% when compared to 4.92% in the previous quarter. Asset quality will be seen closely. Gross NPA as per CLSA is estimated at 2.06% when compared to 2.24% in the previous quarter. So management commentary and outlook with respect to business momentum will be seen closely. Our polls suggest NII growth of 20.3% YOY and about close to 3% sequentially, while we are working with a profit growth of 15% YOY and about 12.8% sequentially. Back to you.
Okay, all right, Abhishek, thanks a lot for that. So we'll be waiting by for commentary on that one. Deepan, any view on Kotak? You told us earlier that you invested in IndusInd Bank, but any view on this one?
I think Kotak also should be doing pretty well and should report excellent numbers. The company has been ramping up on the credit side. They are one of the safest lenders. And the only issue we had with Kotak was to do with their required more aggressive lending, and I think they're working on it. A lot of value being created in subsidiaries as well. And of course, I think because of its underperformance, we have seen a compression in the valuation ratios as well. So it's going to be a secular performer for the next 2-3 years. So very positive on Kotak as well. And if you have a kind of a profile for going for risk-free companies, then certainly Kotak matches your criteria.
Deepan, thank you very much for being with us, and once again wishing you and your family a very happy Diwali from all of us, and hope to see you soon.
Thank you, and same to you.
Enjoy your weekend. Thank you. All right, let's quickly take a look at the market. Take stock basically. 2 minutes to go. The market's not ending in the red. It's ending higher by 25 points, 17,588. Basically just testing that level which we've been highlighting all day. So banks really did not flinch at all. I mean, if anything, the Bank Nifty picked up pace towards the end. The Bank Nifty closes 1.9% higher. It's followed by private banks and the PSU bank space, which were higher today. Actually, apart from banks and financials, nothing else at all. Most other indices either flat or lower. That is the extent of the divergence that we saw in terms of the market today. Market breadth was 2:1 in favor of declines, by the way. So it's pretty stark out there. Delivery for the second straight day, down 20% amongst many others. Nigel, why don't you take us to the broader markets?
Well, from the broader markets, plenty of stocks actually were doing their own thing. Emphasis, disappointing set of numbers. The stock was down 5%. KPIT, well, that stock did very, very well. Yesterday, the management was talking about even higher guidance on the margin front. So that one was up closer around 10% odd. Nimesh said there could in all probability be a settlement coming in the Finolex companies, and that's why Finolex Cables, it was higher, and now it ended with gains of closer around 12% odd. A few other notable gainers, you had Axis Cades that was flying away. The stock did pretty well. South Indian Bank, only 11 rupees stock, but that as well did pop up and trade. And Vijaya Diagnostic, I think Saurabh Mukherjee, he was talking about it, one of their new entrants in their portfolio, and that stock in fact was up closer around 5.5% odd. A few more big movers though from the frontline names in terms of F&O names. Lotus Labs cut guidance, management didn't like it, stock down 9.5%. Berger Paints was down 5.5%. IEX, remember what a beautiful stock it was at more than 300 rupees. It's come down to around 130 rupees. The numbers were disappointing yet again. And ABB as well was down closer around 3% odd. So, to wind things down, we started very, very well. The first half of trade went to the bulls. From the highs, we did see some profit taking. And that's why, in fact, we end more or less flattish with a bit of a negative bias. The mid-cap index, that was the big underperformer today, down 0.8%. Well, on that note, we'll wrap up on this edition of Closing Bell, but you don't go anywhere. As we bring in Samvat 2079, we'll discuss all things market with market veterans Madhu Khela and Sunil Singhania. Both of them will be joining in on our special show, Editors Roundtable. That's lined up on the other side. You don't want to miss this for sure.